Hey everybody, it's Mike over at Taxes and Bricks. Thanks for tuning in. Today we are going to be talking taxes. First major tax video of the year. We are going to be talking about specifically the difference between deductions and credits. And we're going to start off by talking also about the term write-off, why I don't use it, and what it actually is referring to when people say write-off. So, I will say this from the outset. I used to have a disclaimer in my tax videos, and I might add it again later, but this is general advice. It's not specific advice. You want to make sure that before taking any action or doing anything related to taxes, you speak with a qualified tax professional. That is always good advice. As such, I will continue on. So let's start with write-off and what that refers to and why I don't use it. A write-off is a deduction. That's what people are referring to when they say, oh, I got a write-off on my taxes or something like that. And it's because I think if you think about it sort of visually, they're taking an amount of money that is there and they are, removing it or writing it off of their returns. I don't use it. It's not a technically correct term. Again, I use the term deduction instead. So what is a deduction? And then we'll talk about why that differs from a tax credit. So a deduction is an amount of money or an expenditure, okay, that we are able to take and reduce down your income before assessing your tax percentage to it, okay? So let's say, for argument's sake, we're at $100,000 in income and we have $10,000 in deductions. We're going to essentially get your income down to $90,000, and that's what we're going to tax you on, not the $100,000. And that's how you save money with a tax deduction. So let's use sort of a mathematical example here. Let's say at $100,000 you pay 15% in tax. Your tax is $15,000. Easy enough. Well, at $90,000, let's say you're paying 15% in tax. Your tax is $13,500. Last time I checked, $13,500 was less than $15,000. That means you saved some money on that $10,000 in tax deductions. Okay. Deductions take a couple of forms. The most common deduction that you're probably going to see or hear is what's called the standard deduction. Okay, there's a video prior down deep in the original deductions that goes through all the standard deduction stuff and how that works. There's also something called itemized deductions. Itemized deductions are things like medical expenditures to the extent that they are high enough, mortgage interest to the extent it's low enough, property taxes, state and local income tax, mortgage interest, as we said before, charitable contributions, and some miscellaneous deductions. Also have a lot of videos prior on itemized deductions. Something else you're going to hear a lot when people say they have a deduction is when you have a business or a rental property and you have an expense to operate that business or rental property. Those could be a deduction as well. Okay, so deductions take your income down and then assess tax, and that's how you get tax savings. What a deduction doesn't do is it doesn't create a dollar for dollar reduction in your tax. That is a credit. Okay, I hear this from time to time. Somebody will call me end of year and say, oh, hey, I had a little bit extra money this year in my paychecks, and, I made a little bit more money than I thought I would, so I decided to be philanthropic and donate a little bit of money to charity, and I gave $5,000 to charity this year. So my tax is going to be $5,000 lower, right? And then they wait for me to say yes, and the answer that I give them is no. A charitable donation is a deduction, assuming that you itemize your deductions, of course. And as such, it does exactly what I said before. It takes your income down by, in this case, $5,000, and then we assess the tax, okay? So, using that 15% example, you'd be looking at somebody who would save $750 in tax, okay? Pretty simple, all right? In terms of your credit situation, that's going to be a little bit different. A credit takes the tax amount that you are assessed on your income after deductions, and it reduces that down. So let's use that $100,000 person at 15% again. Let's say $100,000, 15%, they're paying $15,000 in tax. Okay? and then they say, well, I have a kid, and the child is young enough to qualify for the child tax credit, that $15,000 in tax goes down by $2,000 and becomes $13,000. Okay, that's how credit works. The credit is worth $2,000. It reduces the tax by $2,000. There are a wide array of different kinds of credits. I mean, tons and tons of them. Some of the common ones are child tax credit, daycare credit or the dependent care credit, certain education credits like the American Opportunity Credit. If you make a small enough income and you also put money into an IRA or 401k, they give you what's called a retirement savers credit. There are the solar panel credit. People putting solar panels on their houses, they get a 30% credit for that. There's a whole host of them. People buying electric vehicles, which we've got an electric vehicle credit video coming up here real soon. I'm finishing up that right now. And I mean, there's a ton of them. And credits fall under two categories. You have what's known as a non-refundable credit, and then you have a refundable credit. What is the difference? Well, a non-refundable credit means that, let's say, again, using that $100,000 person's example, they're at $15,000 in tax. They can have non-refundable credits up to $15,000. And then after that, the credits can't take them any lower in tax than zero. So $15,000, they come with a bunch of credits, solar panel credit, child tax credit, blah, 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 electric vehicle credit, whatever it is, okay? I can get rid of that $15,000, no problem. But any of the additional credits beyond $15,000 that might be worth something to them, they don't get that back as cash or a check from the government in the form of a refund, okay? It could be carried over to future years potentially, okay? But you don't get it back, okay? So if they have $30,000 in credits and $15,000 in tax, we're gonna wipe out that 15 first, and then they got another 15 over here, and I can't get them a check for $15,000 with that example. Okay, what's a refundable credit? Refundable credit, you actually can get the money back, okay? So I think of things like the earned income tax credit, or in the past, some of the COVID relief credits, the credits that were coming, the economic impact stimulus credits and things like that. Those were refundable credits. So you could have zero tax and still get money back, okay? And that's what a refundable credit works. It does in terms of whatever. I'm trying to think if there's anything else with deductions and credits. There isn't really. I mean, that's the main difference. And as such, you just have to kind of know what you're looking at in terms of, do you have a deduction and how does that impact you, and making the right decision. Because again, going back to the example of somebody who comes to me and says, I just went ahead and did something and you donated $5,000 to charity, and they're expecting in their head that they're going to have $5,000 less in taxes to pay, or maybe they're going to get a $5,000 refund or something. It's a misconception that can really hit you hard in the wallet. And so before you make a decision to spend money that may impact your taxes, you just want to check and talk to a tax professional about whether this is a deduction, and thus you're going to get a benefit, but maybe a smaller benefit than perhaps a credit, which could be dollar for dollar. So that's it. Again, like I said, stay tuned. We've got the EV credit, the electric vehicle credit coming, a video coming up real soon. More tax stuff to come here. Very exciting stuff. And thank you for watching. If you like this kind of content, don't forget to hit the like button, subscribe, turn notifications on, because then you'll find out when I put more videos up, and you'll have something to do with your day when I do that. Other than that, thanks for watching, and I hope you have a really great day.